Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into Equifax's latest earnings report for the third quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Equifax has delivered some impressive results this quarter, and I'm excited to break down the numbers with you.
Revenue and profitability overview. Let's start with the top line. Equifax reported a revenue of $1.545 billion for the third quarter, which is a 7% increase from last year. John, what are the key drivers behind this growth?
Equifax's revenue growth was primarily driven by a strong 13% increase in U.S. mortgage revenue, despite a decline in the overall mortgage market. Additionally, their Workforce Solutions and USIS segments showed solid performance, with revenue growth of 5% and 11%, respectively. This indicates a robust demand for their verification and information solutions.
And how about profitability? How did Equifax perform in terms of net income and earnings per share?
Equifax's net income rose by 13% to $160.2 million, and their adjusted earnings per share came in at $2.04, which is a 10% increase from the previous year. This reflects their ability to manage costs effectively and leverage their revenue growth into higher profitability.
Operational efficiencies and future outlook. Equifax has also reported an adjusted EBITDA margin of 32.7%, which is flat compared to last year. What does this tell us about their operational efficiencies?
The stable EBITDA margin suggests that Equifax is maintaining its cost structure while growing its revenue. Their focus on operational efficiencies and strategic investments in new product innovation, as indicated by a vitality index of 16%, is paying off. This is crucial for sustaining long-term growth.
Looking ahead, Equifax has raised its full-year guidance. Can you elaborate on their future outlook?
Absolutely. Equifax has increased its full-year revenue guidance by $40 million and adjusted EPS by 12 cents per share. They also raised their free cash flow guidance to between $950 million and $975 million, reflecting strong operating performance. Their strategic initiatives, including the introduction of new mortgage score pricing, are expected to drive further growth.
CEO insights and strategic initiatives. Equifax's CEO, Mark W. Begor, has shared some insights on their strategic direction. What are the key takeaways from his statements?
Mark W. Begor highlighted the company's focus on leveraging their new cloud capabilities to accelerate product innovation. They've introduced a new mortgage score pricing structure to enhance competitiveness and reduce costs for homebuyers. This aligns with their EFX 2027 strategic priorities, which aim to drive growth, improve margins, and increase free cash flow.
How significant is the introduction of the new mortgage score pricing for Equifax?
It's quite significant. By offering Vantage Score 4.0 at a reduced price, Equifax is positioning itself as a competitive player in the credit scoring market. This move is expected to attract more customers and drive conversion, ultimately supporting their growth objectives.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.93 for Equifax based on a survey of 17 analysts. How did the actual results compare?
Equifax exceeded expectations with an adjusted EPS of 2.04 cents, beating the forecast by 11 cents. This outperformance is a testament to their strong execution and ability to navigate market challenges effectively.
And what does this EPS beat mean for investors?
Beating EPS expectations is generally a positive signal for investors, as it indicates that the company is performing better than anticipated. It can lead to increased investor confidence and potentially drive the stock price higher.
Key takeaways. In summary, Equifax has delivered a strong performance in the third quarter of 2025, with impressive revenue growth and profitability. Their strategic initiatives and raised guidance indicate a positive outlook for the future. John, any final thoughts?
Equifax's ability to exceed expectations and raise guidance is a strong indicator of their operational strength and strategic foresight. Investors should keep an eye on their continued innovation and market positioning.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Equifax's performance in the comments below.